Hi guys, welcome all to the webinar. My name is Mark Shawson, the Pattern Trader. I'll be starting this in just a moment. I'm just going to give everybody a little bit of time to check in. I think I'm still a little bit early. I'm trying to get off today's email here to our elite traders, and I'll talk to you a little bit about that in just a moment. So we have a fantastic turnout. We have over 120 people right now in the room. Expect a lot more. And we'll start in just a moment. So I see a lot of familiar faces and some new faces. So welcome one and all. We'll start in just a moment. I thought I had some help here today. Our moderator, Dwight, was supposed to come and help me out, but I guess he didn't show up. So I don't know what that's all about. So I'll give this one more minute. We're just about on the half hour here. So Chad says, how much is the course? So this is completely free. The next 4 days are only the cost of your time. Dwight, did you check in here?
Hey, Mark.
Hey, Dwight. Oh, you're there. Okay, good. So Dwight, I guess we can, I'm ready to get started. I don't see my video anymore. I don't know if you took that out.
Your video? What do you mean?
Yeah, I don't see my myself on video.
No, maybe because you're sharing screen.
Oh, okay. I don't know how that works, but anyhow. All right, I guess I will start it here. So welcome one and all to this 4-day live trade execution webinar series, subtitled How to Capitalize on Monster Moves in the Markets and Also Avoid the Market Traps. My name is Mark Shawson, the Pattern Trader, and over the next 4 days, I'm going to just share with you how I execute trades under real-time market conditions. So sometimes I see so many times in the comment box that, you know, this isn't real, you're not live, you don't show your account. So, you know, everything I'm doing is live, and, you know, I'll be sharing my trades over the 4 days, see how, you know, they unfold together. Now, perhaps I should just digress. For those of you who don't know me, I have been trading in the markets for more time and more decades than I'd care to acknowledge or remember. I started trading when I was a junior in college. I was going to one of the best business schools in the country, University of Southern California out in Los Angeles. And I was taking finance and marketing courses. And I was also taking an investment course at the time with a guy who's a multimillionaire himself. He actually just asked the school to pay him $1 a year because he was already self-made. And he was just a great guy. And I learned so much from him. But it was completely different to, you know, things that I do today. He was, you know, trying to, you know, help us analyze companies and break apart investments from what we call a fundamental analysis standpoint. And fundamental analysis is when you kind of dig deep into the metrics. So for a stock, you'd look at price earnings ratios, you'd look at sales to inventory turnover, you'd look at cash flow, you'd look at EBITDA, you'd look at the management team, and you would try and make an investment decision based on fundamental information. But ironically, right around the same time that I was going to, you know, these fancy, you know, college courses and business schools and business courses, my dad was doing business with an investment banker by the name of Graham Loving. You couldn't make that name up. You know, Graham was a wild, you know, idiosyncratic guy. He had an eye patch over his eye. He rarely, spoke to you, but when he spoke, it was very profound. And so my dad was, talking to Graham and his company to raise money for a drive-through animal park called Lion Country Safari. But in addition to his duties as an investment banker, Graham was actively trading the commodities futures markets. Now, I don't know how many of you remember back to the late 1970s, but the commodity futures markets were on fire. And in fact, it's kind of not too different from some of the things that we're seeing in today's market. So, I guess patterns and history does repeat, because some of the monster moves we're seeing in the commodities markets then we're seeing today. Lumber, in the last couple of months has gone from 400 to 1600. Copper's gone berserk. Soybeans have gone berserk. But it was the same thing when Graham was trading in the 1970s. That was the first time gold had moved from $200 to $1,000. Silver moved to $50 an ounce, and the Hunt brothers were trying to, corner the markets. Interest rates moved to 21%, and it was, high times in the markets. And Graham was making an absolute fortune. But what really intrigued me and captured my imagination was not only how much Graham was making in the markets, but how he was doing it. So Graham was simultaneously trading, 20 different markets: live hogs, live cattle, soybeans, soybean oil, soybean meal, corn, wheat, T-bond futures, cocoa, orange juice, stock indexes. And, I was thinking, how in the world can you digress all of the information on one market and make a decision, never mind, simultaneously trading 21 markets? And the way Graham did was simply by observing price action, what we call technical analysis, which is just the observation of how price moves. And so this was a complete, different way for me to, look at, investments. And it, for some reason, really suited me, because I'm a very aesthetic person. I tend to, really look at, setups in the ocean. I love, decor. I love, decorating my house. I love decorating my garden. I love landscape. I love doing everything very visually. So this somehow really resonated with me. And so what Graham used to do is, remember, this is way before when we had fancy chart services or the internet or anything of that nature. He would go down to the corner drugstore, get some graph paper, plot an X and Y axis for price and time. And then he would, for live hogs, he would just plot the closing prices every day, or soybean meal. And, he'd say, Mark, I simply want to buy a market that's going up and sell a market that's going down. And that just, completely appealed to my sixth grade mentality, where, I immediately understood what he was talking about. And it was from those early lessons that I learned from Graham that I evolved my own technical trading methodology that has taken me, frankly, years and decades to refine, because I used to take everything out of the textbooks. I used to just consume these 800-page technical analysis books. I just loved it, but it wasn't too soon that I really realized that trading out of a textbook and trading out of the markets is a completely different thing. And so I've tried to build this methodology of identifying and capitalizing on monster moves in the markets while also avoiding the market traps. And we'll talk about all of that over the next 3-4 days together. I'll show you some real-time trades that I'm looking at, show you how I'm looking at it, how I analyze it. We'll see how they move. So just to give you a feeling for what I do, I'm just going to walk you through some of my recent trades. So these are emails that I send out, every day to members on our elite program. We'll tell you a little bit more about the elite program at some other time. But this was an email that was sent out on Sunday, April 25th. So almost a month ago, fully 3 weeks ago. And this will, give you an idea that I hold on to a position if it's working for me for 3 days, 3 weeks, or 3 months, or however long. So I've been in this trade short dollar Canadian from a price of 124.55. And you will see in a moment that prices, settle today around 120. So I'm making 455 pips profit in this trade. And yet I still continue to hold on to it because it's still showing me that the trade and whatever I analyzed is still intact. And at the time, I recommended put a sell stop. I have a stop loss, a take profit. I've since moved that take profit. I keep adjusting it as something moves in my, and I said, basically the dollar's in a long-term downtrend. I believe short Canadian is a great way to play this freight train. You can't see the other part of my analysis, but this is just giving you a flavor for, what I do. So every email I show, our members exactly what I'm looking at on the chart. And then I showed them the setup below. So in this case, it was the euro versus the Japanese yen, a weekly, identified a double bottom, head and shoulders. And I'll show this in real time. And I talked about the euro yen being on the cusp of a major long-term breakout. And this was 2 weeks ago. And we formed a double bottom, inverted head and shoulders, et cetera, et cetera. This was another trade that I sent out about a week ago, suggesting we buy the pound versus New Zealand dollar. I'm going to talk about pound New Zealand dollar extensively today, based on the double bottom price patterns, et cetera, and suggested to our members to buy pound New Zealand. Also suggested to buy silver, suggested to buy gold at 1831. Today, gold hit 1868. So making some massive moves there. And this is kind of the snapshot of, what those trades look like, on my trading account, where, I took a very aggressive position in dollar Canadian. I felt like this was just a go to the bank, no brainer trade, so I take different lot sizes based on my feelings. And you can see that I've got 140,000, almost $200,000 in open profits just from dollar Canadian short. And then I'm also short, long the euro yen, bought some Australian. Here is my pound versus New Zealand dollar. I advised our members to add to their position today in pound versus New Zealand dollar. And then you can see, silver and then some robust gains in gold. Now, I also actively trade the stock market, took kind of a hiding today, got in early on Tesla. I just don't know why I bought it so early. I just had a feeling that we're starting to, trying to grab a market bottom here. And you can see I put about $3 million into this trade. And, right now I'm losing about 50 grand. We'll see how this goes. I also bought some call options on Uber, the QQQs, which are the NASDAQ. I got in all of those early. And then also CRM, which is Salesforce, and I'm getting punished on that. So losing about 65 grand today in today's P&L on my stock trades. So I trade, I show you the winners and the losers, and I've made an absolute fortune in the last couple of months. A couple of weeks ago on the same format in a free webinar just like this, we were looking about 3 weeks ago at a stock called QuantumScape. This was the chart that I took at the time. I said at that time on the webinar, I realized it was really reckless to say that I felt like there was no risk, in shorting this stock. And, I've been short QuantumScape from $40. It went to $25 last week, and I took about 7 figures out of those trades. So you can see here are some of the trades that I've taken out of QuantumScape, where I've traded the put options, where I've made, gains of, hundreds of percent. Here's some, more gains from QuantumScape put options. And here was a trade that I closed out last week that was $309,000 in the green, where you can see the price was around 25 bucks. I got out just a little higher than that. So really been pounding it out. So I'll show you some of these other trades over the course of the next couple of days to give you a feeling of what I do. But now, what I'll do is I'll just go to the real-time charts, show you what, or, take a look at what, I'm looking at now. And, we'll just go from there. And then, we can, take some questions thereafter. Okay, so as I indicated, to me, I'm taking a long position in pound New Zealand dollar. And what I'm going to do is just go all the way back to give you some reference on how I kind of look at things to analyze and capitalize on big moves in the market. Now, I probably should also talk and distinguish, this strategy from perhaps what most people are doing, which is intraday trading on short-term charts. So what we're looking at here is a long-term chart of the British pound versus New Zealand dollar going back about 3-4 years. And so to my mind, stepping back and seeing the forest from the trees gives me a global understanding, of the trajectory of what it is I'm trying to trade. Now, certainly in something like pound New Zealand that hides its intentions, you cannot, understand where this is going by trading off a 15-minute chart. And, probably this is a good time just to, set up, side by side what it is that I'm trying to do versus what most traders are trying to do. So I am trying to, like I said, capitalize on monster moves in the markets. And we see these all the time where, in this period, we went from 165 to 189. We went from 170 to 196. We went down from 205 to 180. And so what really fascinates me and intrigues me is that when I see these moves, what I try and do is try and see the patterns that lead to these kind of trajectories and then try and take a piece of the middle. So if you've got a 2,000 pip move, if I can take, 300 pip chunks out of that, take 600, 800 pips out of that, that's what I'm trying to do. But, it just mystifies me how most people, what they try and do is they pull up, a 3 hours, in front of their computer, and then they try and, take 10 pips out here and 20 pips out there 5 times a day. Whereas I'm trying to take a piece of the middle out of, big, broad moves. And that's really the difference. And frankly, not only does it enable me to make a lot of money, but I would also counter by saying that unless you're able to do that, it's highly likely that you're going to be successful trading the markets. Now, that is, in my opinion, the statistics reveal that over 90%, I think it's probably a lot worse than that, of people are losing their money in the markets. And the question is why? If markets can really go up or down or sideways, why is everyone losing? And I think there's obviously, we could spend 2 hours answering that question. But, if I were really to kind of whittle it down to one thing, it's that people are looking at too short a time frame. So they really don't understand where this thing is really going to go. And then their objectives are too small. So if you're trying to, carve 10 pips out of the market, 15, 20 pips here and there, and you're trying to do that 5 times a day, it's very unlikely that you'll be able to stack those pips up and, be successful over the long run. Where what I like to do is enter a trade once and sit in that trade for 3 weeks or 3 months and watch it just, work in my favor. Now, they don't all go that way, but then they don't have to. If you just take out 1 or 2 of these trades a year, it'll make your entire year. I mean, I didn't show you, some of the trades that I did just a few months ago in the NASDAQ where I made 7 figures, gold, I've made all kind, just a ton of money on these bigger moves that occurred in the market. But sometimes the markets just go quiet, and then I'll just sit on my hands and wait for the next move. And so this is really the distinction. It's not for everybody, but I'm going to just kind of peel back the curtains and show you how I look at markets and how I capitalize on these monster moves. So this is the British pound versus New Zealand dollar. It's kind of a, idiosyncratic little pair. Not a lot of people focus on it. I know I didn't until I kind of saw this pattern about 4 years ago. And then once I kind of see a pattern, I don't care if that pattern's in corn, crude oil. To me, the pattern, it precedes the trajectory. So once I understand the pattern, then I can understand how to, trade the thing once, the thing starts playing out. And the pattern that I'm referring to is that you can see that pound New Zealand came crashing down from, in this time frame, 225 all the way to 165. So a giant downtrend. But right around here, you can see that prices stopped short and put this little, double bottom here with what I call these key reversal price actions. And then you can see it did the same thing here. So it literally formed this double bottom, which is just what it sounds to. Prices crashed to an all-time low. They bounced off, they retest. And when they come through the neckline, which is simply a line drawn through the pattern, that to me is confirmation. This is the green light that this thing is turning around. Now, like I said, very difficult to trade, out of a textbook. What I've learned through circumstance and trading and experience is that things that go straight down typically don't go straight up. And you can see that this is, over time been going up like in the stealth bull market. And I think it's ready to do one of these. So it's probably great fortune that you and I are kind of getting together now, because I think that we are on the cusp of a monster move in pound versus New Zealand dollar. Now, also in this time frame, we had a rounding bottom. And we kind of have the same thing setting up right now, where you have the double bottom and you have the rounding bottom. So you can see, whereas this led to, this, I'm surmising that the same thing is going to happen. So these patterns do repeat, just like, patterns that you see in the ocean and on and on. So again, what became resistance, overhead resistance around 180 became new support. And then you see along the way, pound New Zealand grabbed another double bottom here. And then it's my contention we grabbed another one there. And I said so in this time frame. I also said that it wasn't going to be easy, that it wasn't just going to go from a downtrend to an uptrend, that this thing was going to take its sweet time, which it has, to build away. And I think that we are on that path right now. So this is the weekly chart, which means that each one of these price bars represents 1 week in time. Very different than looking at a 10 or 15-minute chart, where we can see these double bottoms and double tops on a 15-minute chart. But, the market can go anywhere in the next 15 minutes. This is a weekly chart that is played out over 5 years. And I said all the way back here, I was screaming at the top of my lungs that this market has bottomed, and that over time, and that's the key thing, over time, this thing was going to go higher. And I still very much believe that. I bet, a lot of money on it and made a lot of money. Now, it's not to say that I don't do what I call counter trend moves, meaning that you can see that this has been a difficult market. This has on balance gone from 165 to 195 over 4 years. So it has gone higher, but there are whole periods of time where this thing comes off. And I will, trade those, what I call counter trends. So to me, this is the main trend. But you have these counter trend moves that occur all the time that, also offer trading opportunities. So I don't want to kind of dig, too much into the weeds right now. So in addition to understanding the patterns, and by the way, once I see a pattern like this, even though it was 4 years ago, this is my cheat sheet. This is my, trading for dummies, kind of reference. So every time this thing comes lower, I'm looking to buy it. Why? Because to me, the bottom has been put in. And if a market tells you that it's bottomed, then over time, it can only do what? It can only go higher. Now, this has been one of the more difficult markets, dealing with that kind of supposition. But this governing price pattern has not been violated. And to my mind, what I mean by a governing pattern is that once the pattern is set, this governs or dictates the trajectory going forward. And by and large, that has what has occurred. So I look for these patterns that occur over and over in every market all of the time. Now, in addition to the patterns, I look for confirmation. So, I've kind of learned to anticipate these patterns in my sleep. I can kind of see them forming as they're about to form. So once I see one bottom and it starts coming here, I can start anticipating that it's going to come here, and I'm already looking to buy it here before it goes there. But what I really look for is confirmation. So when I think I'm seeing a pattern forming, I then look for a deeper confirmation. And the confirmation I look for is what I call what I call these insurance day bars, these key reversals. So you can see right here, the market made an all-time new low and then closed 1,000 pips in the other direction and closed on the high of the week. I call that a key reversal, where, markets, earlier in the week or the day or whatever period you look at, go to one thing and then they close in the opposite direction. So it may not have closed at the absolute high, but I think we can agree that by closing closer to the high, within the, top quadrant, let's say, that now it indicates that it tells me that the buyers, even despite the fact that we went to an all-time new low, by the time the week closed, the buyers were in control. And the bigger the bar, and this was probably the biggest bar we've seen up until right here, the bigger the bar, the more significant the indication of that reversal. So the combination of the double bottom and the key reversal it starts telling me that this thing is starting to turn. Now you can see right here at this other bottom, made a new low, close at the high, made a new low, close at the high, made a new low, close at the high, and it was right here in March of 2017, I think it was. Yes, at 175.09. I sent an email to our investors, like our traders, members, whatever you want to call the collective pattern traders, get long with gusto here. And then I got long right above this inside bar, and we rode this thing to 189. And so it's these kind of moves that I'm looking for. 175 to 189, that's 1,400 pips. So this is what I'm looking for in my trading. I'm not looking to duke it out with my broker, trading in and out of a market, 15 times a day, trying to carve out 10 pips here and 20 pips there before it comes flying back in my face. So I'm looking for setups that then project these massive moves. And you can see the same thing here. We had a consolidation, this cup and handle, if you will. This looks very much like the near-term daily chart that I'll show you on Pound New Zealand, where you see this, kind of a cup and a handle thing here. And then if you dig within the price bars, you can see all the way back at the start, this key reversal. And you can see that low was never taken out. So these reversals, sometimes they set back, they make a low, and then sometimes it takes, a couple of weeks after that low is made while you're trying to, so that's probably 2 months of trading. The low was set in here, but I always say the market's like a magician. It kind of, magician never just runs out on stage and pulls a rabbit out of the hat and all the mystery's taken out. He wants to kind of, deflect your attention. And that's what the market does. So right there, the market was telling you this thing was going to turn. And then it tried to shake all of the weak hands out, before it then went on its merry way. And so I've learned, that the market is a process, so that I might get in early, and sometimes I get in very early, but then I just stick it out. I'll just sit there for 2 months and stick it out if I'm pretty confident that I've got a guiding pattern and guiding price action in my favor. Now, there was a couple of other things, just again, not to throw too much at you, but there was a couple of other things that confirmed that my instinct that this thing was going to go higher. Because right here we see a bearish price pattern. And I guess maybe I should have started all the way back and said, look, we see all kinds of patterns in the market, and there are two very reliable reversal price patterns. So this is a double top, an M top. It looks like the letter M, and when we see that, the market just craters from there. If you look at the stock of Zoom at $588 or Peloton or whatever, they all started with a double top before they crashed. Another top pattern is what we call a head and shoulders. So this looks just like a man or woman's left shoulder, head, and right shoulder. And these are what are called reversal patterns, meaning that leading up to those patterns, the market was going higher. Once a pattern's been established, by virtue of it being a reversal pattern, it then means that prices are going to reverse and go the other way. And it's the same thing with the head and shoulders. Leading up to the head and shoulders, it's a bull pattern. And then once this thing is confirmed, it indicates that the market is going to go lower. Now you'll see these in every textbook and every website on chart analysis, and I'm not going to show you anything new. What I am going to show you is how the market actually trades, around things that look like a textbook version of something. So when I saw this when I was in my 20s, I'd see a head and shoulders, I'd bet everything on it and say the market has to do that. And then all of a sudden it would do that and I'd lose all my money. And I go, well, what just happened here? I just went to the textbook and this is a classic thing. And I thought I read it right. But what I've learned to do is draw my structures around the market and then see what the market does. And again, the market's intention in this case was revealed all the way back here. What you're seeing here is a bit of this magician distraction where it looks all the world like a head and shoulders. So if you showed me this on a textbook, I'd say, just go to your bank and back up the money truck and, let's get short. And so you can see that once we crash through the neckline right here, that now this should have been a go to the bank trade. And so this is what I have learned to do is, once I see a structure, then I start observing what the market does around that structure. And so if I have a head and shoulders, this is a bearish price pattern. This indicates that the market went up and now it should go down, if you interpret that literally. And so what happens, the market will do that. It'll break through here. You'll think you've got the tiger by the tail. And then all of a sudden it's up here and you go, what happened? It's like, what's wrong? I read this thing perfectly. And so what happened was you had what I call this bear trap, where traders who got in here are now going to be trapped, in the wrong direction. So I realize this is a lot of nuance and what have you. I don't know how to kind of put it in a digestible content for those of you who have not been exposed to this kind of language. But to me, once I understand this is the governing price pattern, then I'm always on the alert for the trap. And so what happened here was, and I couldn't be short this time because this looked for all the world like a fantastic looking head and shoulders. But my instinct told me that this thing was still going to go higher. And then when I saw this little mini double bottom right here at the 185, I knew it was game back on here. And so, like I said, I try and capitalize on the monster gains, but I think what I do just as well is I understand where the traps are. And that's what the market will do all the time. The market will show you all kinds of patterns all over the place. And now you got to sort which ones are what I call the dictating or governing price patterns. Kind of easier said than done. I've got decades of experience doing it. And, I feel like I've developed a pretty good feel for it. So once I understand what's going on the longer time horizon, and I think I understand what's going on with this market, then I try and whittle it down to an opportunity where I can establish a risk reward trade. So now I'll, revert back to the daily chart. Sorry, those were candles. I like to look at bar charts, and people, are not really familiar with bar charts. To me, how a market closes relative to its high and low, tells me, so much. As I showed you on those weekly bars, when something reverses, it starts telling me the market is starting to point in the direction I should be looking at. So, in this duration here, you can see that you had this key reversal here. You made a new high and close on the low. And for that duration, it pointed that the market was going to go lower. So now I've peeled back from the weekly to the daily chart on, this is the British pound versus New Zealand dollar. And so here we see this double bottom that we saw in the weekly a little bit more profound. And this was, again, kind of that head and shoulders where you had looked like that head and shoulders, looked like we were cratering through the neckline, and it looked all the world at this time that, the market was now poised to go much lower. And if that was a good head and shoulders, it should have, maybe should have bounced, gone here, and then we should have seen this. So when I see these structures happening in the market, then I look at how the market responds and how it should respond. And if it doesn't, it always sets up my antenna. So again, based on the weekly, I was always alert to a new buying opportunity. No matter how bad this thing looked, I knew this thing would find, like Humpty Dumpty, find its way to put itself back on the wall again. And so all the way back here, and again, I remember on one of these same webinars, I said at the time, this is a buying opportunity as this was happening. But I also said that this is not going to be easy, because when you see things crater as quickly as this did, it doesn't just turn around and go up. It's got to create, this concept. I always talk about this concept of spacing, where you've got to create, some space, so it can go up from the wall that it went down from. And that's basically what you've been doing over the course of the last several weeks. So all in this duration, when it was going up, down, sideways, I was saying this is a buy, and you just gotta, just stay in there and believe it. And you can see that it was just weeks and weeks and months of just doing nothing but going back and forth. And this is what markets do. They're a process. When markets are turning around, especially when they're turning around, like I said, things just don't go from straight down to straight up. They put in a bottom, and then it's a process before they start turning around in the other direction. And that's the patience, the discipline, the understanding. But this is how you capitalize on monster moves. So very subtly, when I started recognizing this was bottoming in the low 190s, all of a sudden we're at 196, we're 600 pips higher. And I'm still in this thing, and I will be in it, when it's up here, and I'll be in it here when it's still up there, because that's where I think this thing is going. So now, in addition to this kind of double bottom and rounding bottom here, which is the same thing we saw in the weekly, this kind of also looks like a cup and handle. So it looks like a teacup and handle. So you see all these crazy, patterns in the market. And I usually deal with some of the conventional ones, but in this case, I saw this today. I sent it in my email. I just started seeing it in a different way, that this looks like a cup and handle. And this is the common neckline, which is simply a line drawn through the pattern. And when or if this thing breaks this 198, this will be, confirmation. And then to my mind, we'll have, nothing but blue sky up here to roam in, that this thing will have a monster breakout. And so to my mind, this is setting up for a huge move. And, probably good that we're getting together here. So you can see also, this is the same pattern that we saw in the weekly chart, where all the way back in the initial part of the, kind of back and forth, we see this key reversal. And then it was just this kind of shake out the weak hands type of process. And then mysteriously from nowhere, it just, goes back in its merry way. And so I've been saying forever, and there are probably people who've heard me for weeks and weeks say the same thing, that this thing was going to go higher, even though for all the world, it just never looked like that was going to happen. And so how do I know this? I mean, I don't have any, friends at the New Zealand Central Bank Authority or the UK Central Bank. To me, it's just observations of price and price action. And what I mean by price action, you can see now in the last 3 days, and these are daily bars, where the prior chart was a weekly bar. So this means that each one of these bars represents one 24-hour session. And you can see 1, 2, and today, these 3 bars, all of these 3 bars sit within the daily range 4 days ago. So I call this an inside day bar coil. Now, what I mean by a coil is that it's storing of energy. So now once I kind of understand the direction, the pattern, now I look at these coils and I can surmise how this energy is going to release. So I always, make the metaphor of, think of putting your hand on top of the beach ball and compressing it further and further, underwater. And then you let your hand off the beach ball. What's going to happen? It's just going to uncoil. The energy is just going to uncoil. And so this is what this inside. So you can see all of these 3 days, up, down, sideways, all over the place. But what it's doing, it's building energy to release and uncoil in the direction of the pattern and the trend. And to me, this is a great example why, while it doesn't look like it, if you looked at this chart and just opened it up and, if you just had to spitball this thing and you didn't know what it was, and, I kind of put it in front of you and said, sorry, I'm trying to get rid of this. What is this chart? It's hot, it's like, it's neutral. How do you tell? It looks like it's going nowhere. But to me, this is, I guess beauty's in the eye of the beholder. I kind of put up a chart just like this a couple of weeks ago in the stock called QuantumScape. And I asked, people on a coaching session to tell me what they thought of that chart. And it looked, all the world, it looked like, one of these very ambiguous things. And everyone couldn't make heads or tails, and it didn't really look too sexy to anybody. But to me, I made $1 million in that move out of QuantumScape when it just looked like nothing before. So to me, it's kind of, again, beauty's in the eyes of the beholder. And the way I kind of look at charts and patterns and movement, this thing looks like it's about to go like that. So probably this is a good place for me just to stop and take some questions. So first off, I'd like to know, what you guys' automatic reaction is. Do you, think that, this could have some value to you? Do you kind of see that it could change your trading? So again, what I'm trying to do is take pieces of the middle. So if a market is, going to make a huge move up or down, I'm trying to just take 300, 400, 500 pips on those moves. I'm not trying to pick an individual bar and trade in and out of it 5 times a day. So it's a very different mentality. And, sometimes you just have to wait 2 months, twiddle your thumbs, and do nothing. But my contention is, if you get in here and you get out somewhere up here and it takes you 6 months to do it, do you care if it'll make you money? And the thing is, you have to be honest, because how many people could just sit and do nothing? How exciting would that be? And I would hazard a guess that a lot of people would prefer just trading in and out than doing nothing for 6 months, even if it could make them 1,000 pips. So Joan says, how do you know which double bottom to look at? The chart shows something in July. So yes, so you can see there are all kinds of patterns, and there was a double bottom. And you could have, taken a piece of the middle. So I will do what I call these counter trend trades, where, you have to kind of blend what's going on the daily and the weekly, and then see, then the market tells you when it's over. So just as the market puts you in, it takes you out. And I'll show you that on a couple of stocks I was trading just last week, where you can see right here, you had one of these reversals, made a new high and closed on the low. And you can see this was a relatively big range. So last week I was telling everybody I'm short Zoom. I've been short, QuantumScape, and also the stock of Zoom. And then all of a sudden last week, I started noticing these reversal bars that started suggesting to me that there was a turn, in the market. And, I started getting out of my shorts based on the fact that the market started to tell me that there was a turn. So yes, there was a double bottom here. But to me, this is a very profound, this is a double bottom, where you can see this is still part of the, you'd have to go back and look at the weekly and look at a greater time frame. But, that certainly was a tradable double bottom, where if you bought it right here at 193, you could have gone to all the way to 202, and taken a piece of the middle out of a monster move like that. So I will trade those patterns. But to me, this is, I think, going to be the definitive pattern where, here you can see there was another low to be had. I don't think you're going to go make no new lows here. So if the market isn't going to go lower than this, at some point it's going to go higher. But that is a good question. And that's what I said to you. You will see patterns all the time. And now you've got to distinguish and put it all together, which ones are the guiding patterns. So Nick says, how do you manage a trade if it goes against you? So that's a great, and it's all about risk reward. So what I try and do is, once I see a setup, I then try and find what I call insurance day bars. Now, what is my definition of an insurance day bar? This is kind of a slang that I've developed. You won't find it in any textbook. Why do I call it insurance day bar? Because the definition of insurance day bar is that it's a bar that tells me how to hop on board and get in sync with the momentum and also understand where my risk is. So I have two kind of definitions of what I call my insurance day bar. One is what I call a key reversal, where market goes, higher intraday, close on the low. And so it indicates you where the risk is. Now, the reversal could be the other way around, depending on which way you're looking at it. So once I kind of understand my pattern and I feel like this is a bottom.
Hey, Ron, what's up?
What's that? Now I wait for certain days that stand out to me. Now you can see these key reversals, made a new low, close at the high, made a new low, close at the high. And I will just simply put a buy stop above those days and put a stop loss underneath them. And that's how it tells me to hop on board, a trade, and also where and how to assess my risk. Now, another bar that, I look for that helps me get closer and closer to a trade is what I call an inside bar, literally where the range from high to low sits within the range of the prior day. Now, as I said, the range of the last 3 days, you have 3 trading days. You had, 1, 2, 3. So all of these trading days are inside bar days. So you can see right here, inside bar. So to me, that's a coil. So you can see here was an inside bar right there. The high and low was within the high and low of the preceding day. And so that tells me that there's a coil there. And so I would simply put my buy stop right there, and I put my sell stop there. And so that is my risk, and that's my reward. And so what I try and set up trades is to have a 3-to-1 risk reward objective. So what does this mean? So this means that if I'm going to risk 50 pips, I want to set up a trade that I have a minimum 3-to-1 risk reward. So if you can do this, if you can set your trades up, and obviously you have to wait for those opportunities. They don't show themselves all the time. But if you can set up most of your trades where you're winning 3 times more than you're losing, you can actually lose 72% of your trades. That's just math. So, very often, when I was managing money, people say, well, what is your winning percentage? What is your winning trade percentage? And, I kind of laugh because it's an irrelevant statistic. I can lose 5 out of 6 trades and be a huge winner, and very often am. I mean, I think in 2019, I never had a month where I was above 50% winning trades. And yet I made a monster because it's the quality of your winners versus your losers. Now, this is the complete opposite of what most people do. So if you're trying to take out 15 pips on a trade or 10 pips, you're also looking to risk 15 pips. You also have to pay the broker 2 or 3 pips every time you trade. And so you have a 1-to-1 risk reward. And so now you need to be 89% or 90% correct on your trades if your win-loss is the same. And this is the problem. Most people's objective is just too small. I have so many reviews that I read on my review website, and I read, Mark, until I met you, I never made 100 pips on a trade. I know that because everybody's teaching you garbage. They're teaching you these Bollinger Band overlay things with moving averages on a 15-minute chart. And if you're nimble enough, you can grab that. And then you're supposed to do that 5 times a day. That's just bollocks. You're never going to be consistently, winning doing that. And thinking how tiring that is. So would you rather be in, if you made 20 pips a trade and it took you 30 trades to, make 600 pips, I'm in one trade and I make 600 pips. It just sounds a lot less, a lot more, and you're not going to make 600 pips. You're not going to win 30 trades in a row looking for 20 pip trades. Whereas I just will stay in a trade and camp out there and look for 600 pips or 800 pips or 1,000 pips, which I believe this trade will give me. And that is the difference. But again, you really have to look deep into your soul and say, you know, what do I want to do? What do I want to achieve with my trading? If I asked everybody here, what are you trying to do with your trading? And of course, everyone would say, I'm trying to make money. But then, you know, if you were really put to the wood, you know, would you really, I mean, maybe you're doing it for the rush, the distraction, the bump, the action. How many people could just sit on one trade for 3 months if I told you that's all you can do? You go crazy. But that's what I love to do. I love to find these little pearls in the oyster and, you know, start, you know, just getting on massive positions and then waiting for them to, you know, go to the beach. It's like, you know, it's like those surfers that go at 5 in the morning. You know, they wait 3 hours for that perfect wave that'll take them all the way to the beach. That's what I like doing. I like to just, you know, just calmly sit in the water and wait for something to start accumulating energy. So Agabus says, when is it time to exit a trade? That's a great question. It's basically the same as when you exit it. So, you know, up here, and I kind of ignored these, this kind of told you that, you know, the market was building here, and I thought it was going to take off here. And I thought this would just be a consolidation and it would keep going up. But actually in this time frame, the market just said, you know, you could see these reversals. You could see this double top right here. Made the same high, and you had these key reversals, and this led to a giant sell-off. You know, it came right to this resistance level. And I was so caught up in the big picture time frame that I thought it would just shake it off and you know, and go on its way. And it turns out, you know, it went down, and all I did was buy more. I just have a conviction about this thing. So, you know, now, you know, if the market goes up and it goes, you know, up here, and it gives you, you know, one of these little reversals, and you want to take off your trade, then the market, you know, will tell you to get out. So I was short all of these trades last week.
Hey, Mark. So Pedro is asking, how do you determine reward at the beginning of risk reward?
Well, sometimes you can measure it. And, you know, sometimes, you know, you just, it's really based on the size and the duration of the pattern. So the more time a pattern takes to, you know, build itself, the more, you know, likely, you know, you're going to get a much bigger impact out of this. So this is a good example of a stock that I have been trading, you know, on the downside for weeks and months now, and advising our members that, you know, this was a short trade. So this is the stock of Zoom, ticker symbol ZM, you know, so that it's what we're using right now, the video conferencing service. I always felt a little weird that I'm building my business on Zoom and then I'm telling everyone to go short their stock. But you can see that the stock went from $588 to $288. It crashed. You know, I was telling people that there was going to be a crash in the market, and there was. Even though the NASDAQ is sitting at an all-time high, there's like a whole subsection of these companies that are down 30, 50, 70% from their high 6 months ago. But it was the same kind of thing where I saw the combination of the pattern right there. You see the double top, you see the key reversal right there. And then in addition to the double top, you also had this head and shoulders. It actually was what's called a complex head and shoulders. And so this was my guiding pattern. It was telling me that this stock had topped out. And if something's topped out, it's going to go lower. So yes, you have, you know, these tremendous runs, but if you know it's going to go lower, I just shorted into those. So you can see here was another double top. And then we had, you know, kind of an interesting situation here. We had this descending triangle, and here was a double top where I said, you know, we're going to have another push to all-time new lows, you know, all-time meaning for the last 8 months or so. And you can see that's exactly what happened. But now here's the thing. So this is where, you know, you set up your trades. You know, I had my double top here. I was shorting all the way down here. I was short into these days. And then all of a sudden the market starts telling you that there's something else going on. So this was the first thing that started telling me there's something, you know, else afoot here, where you made this key reversal, made a new low, close it the high. Then you kind of had this inside bar. And then a day later, right at this double bottom, you had this other reversal, made a new low, close at the high of the day. So I was, that was it. Thank you very much. I've made hundreds of thousands of dollars, on these trades lower. And now I said in my weekend, email just yesterday, I said, I think I'm starting to get a feeling that these, beaten down stocks are going to have a lift now. The question is, okay, how much of a lift? And, when you get what I call these short covering rallies, they can be monstered. So you could, get a short covering rally in Zoom that takes it all the way back to 340 or even higher. I don't know where it's going to carry from here. I don't know what it's going to kind of do. I just feel like what I said, there's a trading bottom. So I'm pretty aggressive. Once I start seeing these, reversals, they kind of tell me where the short-term risk is. So if I start getting on trades here, I feel like I know where the risk is, and then the reward, is going to reveal itself. And maybe it'll go up here at some point, crap out, show me another, double bought, kind of reversal, and then it'll go back in the direction or not. So, I've traded that pattern. I've traded that trend. These short-term little, reversals here started making me, nervous on the downside. And, that's why I kind of loaded up today on Qs, on Tesla, or whatever, because I think that we're going to start getting, some of the turnarounds in these names. And it was kind of the same thing for QuantumScape, where I was very aggressively short this stock. And, probably still need to be. But, I just saw a short-term little bottoming, the other day. And, I had a huge position. I said, you know what, I'll come back at another time. So I have a philosophy. The market puts me in, and then the market takes me out. So this is QuantumScape, the ticker symbol QS. And what I would say to everybody is that some people don't trade stocks. Some people don't trade Forex. What I'm trying to show you on these presentations is how I look at price patterns. I don't care if it occurs in corn, wheat, gold, the euro yen, it doesn't matter. To me, I just trade the patterns and the market. And so I'll just go into this and then I'll kind of finish it up for the day, with this. I don't want to overwhelm you. So in this time frame, again, we see these, head and shoulders, patterns in different things reveal themselves in different way. And so right as this thing took off out of the gate, in so doing, it put on a top. So once I understood the market topped, every time it went up, I just shorted into it. And then you see, all along the way, there was some interim topping action. You had a double top there. You had a double top there. You had a double top there. And then last week, you had a double top at 37. And I went to town here. I shorted about 100,000 shares and options. Because to me, and I said it on webinars, I said at that time, I just couldn't see any risk of this thing going higher. From, a combination. So when I open up a chart, the first thing I say to myself, what is the phase or condition of this chart? What is the environment? And I think we can pretty well agree that if a market drops from 140 to 25, it's in a downtrend. It's in a downward phase. It's in a downward condition. And so you should, by and large, look to go short or take advantage of this downtrend. Now, once I understand the trend, then I kind of, drill it down to, a set of, days or bars where I can see both the pattern and the price action. So you can see, in that particular juncture, you had a double top at this level, and then you had this key reversal price action where you made a new high, close on the low, made a new high, close on the low. So when I see a cluster like that, this is what I call my insurance day bar. Because I know if I get short right here, if I put a sell stop under that low, I know I'm pretty well, I can take a peek at that market. I can get short, and I don't think it's going to the next day go right through me. So I can at least get a peek to see how that feels. So why I call this an insurance day bar is because that bar tells me how to hop on board this trade and also how to assess my risk. And so to me, that's the holy grail of trading. If you can understand when to get into a trade and what your risk is. So right here, I had whatever, a $5, $8 risk for a $30 downside. a 6-to-1 risk reward. Now I'll do that every day of the week and Sunday. It's just finding these trades. They don't, give themselves to you, all the time. But when you find these things, you can just, load up the money truck on this thing, which I did. So in addition to all of these bear price patterns, you also had this descending triangle when you, touch all the highs, and you had this common low. So you can see sometimes patterns, they break out, everybody gets excited, and then they do a retest. And when it fails on the retest, this is when it's really good to go. And so, this thing is probably still going to head lower, but you can see in this juncture, you started to get a little bit of turbulence here. You had a key reversal there, you had a bit of a reversal there, and you had a bit of a reversal there. Now today, it's very subjective. So, we're starting to kind of find a cluster where there may be some support here. And so, I get out and I'll just reevaluate. I imagine I'll come back into this name, but here again, I mean, when you short something, it can only go to zero. So that is theoretically your maximum upside, and then you've got an unlimited downside. So, I want to find stocks that are, obviously higher than $30 or $20. I started shorting this, all the way up here and then up here because I thought it just had a fantastic move in it, that it was just a no-brainer. Now it's getting down to 25 bucks. It's like, to make the next $5, you might have to risk 10. So, it doesn't have the same kind of risk reward calculations. But all I'm saying is that the patterns put me in, and the price action, started taking me out. Okay, Dwight. So I think from here, I'll just take some questions. So instead of, I'm not going to show any more charts. I'm going to leave something for the next, couple of days here. So.
All right. So one of the main questions or next questions coming from Neil Holidays: how do you find these trades? Do you scan all stocks?
That's a really good question. So, I look at the ticker on the financial station all day. I also look at earnings. So every day you have all of these companies announce earnings. And very often I'll play a company right before it announces earnings, because my feeling is that if you see a pattern, the news should just be a catalyst to release that stock in the direction it was going. And so, I will, go through hundreds and hundreds of these names. You can see there's pages and pages, sometimes more than others. And I'll just go through all of these names. And sometimes, it'll reveal a name where now I just start seeing a chart pattern. I start writing that down. I keep an idea whether I want to go long or short. So I'm always looking for ideas. I'm talking to you guys. You guys tell me about, stocks that you're interested in. And, it just goes from there. So I just, spend a lot of time, just sorting through a lot of stocks and a lot of names. It was nice with FX. I was principally trading FX. And sorry, I'm just trying to get out of a name here. So yeah, when you're trading FX, I just have like 20 pairs that I look at, all of the liquid pairs, the yen pairs, Swiss pairs. But stocks, there's a universe of 20,000 of them. So you can't dance at all the weddings. I kind of look at, my groups: technology, healthcare, cyclicals, industrials, and then try and find the best ones I like in there. It also, the market now is going through an incredible churning process where every day the environment change. One day growth is in vogue, next day it's, momentum, then it's value. And then on the fourth day, it'll switch back again. So you really got to hone in and, focus in the stocks you like. So stock that I started buying call options in this morning was Uber. I also like Lyft. I made a ton on Lyft just a couple months ago. And it's really kind of the same process where I start off with, and I try and find, where I can find risk and reward. Certainly when you're buying call options, you've got to be right, and you've got to be right now. So I kind of bought into the dip this morning, thinking that this would recover, and it did. So, Uber's kind of got this reverse triangle formation here. Now, you've sold off heavily out of here, but this traditionally isn't a kind of reversal price pattern. When I showed you, a double top or a head and shoulders, those are reversal price patterns. When you see those throw a market into reverse. And once they're completed, then, they start going the other way. This is not traditionally a reversal price pattern. So while you did have some, this triple top on a daily, and you broke out of here, I just feel like this is in a longer term uptrend, and this is kind of a bit of a bear trap. So you can see how you snuck under this support line, and now you're kind of creeping back under here. So I just feel that you're going to have a counter move the other way. And so I bought these calls, very aggressive. Bought like 500 call options today, which is like a 50,000 equivalent to 50,000 shares. And I bought some of them for as low as 30 cents. I bought the $49 calls right here. So, and they expire by Friday. So that means that this has got to move to about there by Friday for me to, see, my money back or make some money. And I thought that there was a pretty good chance of that. So I bought some call options on Uber, and, similarly, I like, Lyft, and it's the same concept. So just like pound yen, I start by looking at the longer term. So this is about as classic a double bottom as you could ever find. When I saw this, I was just salivating. I was looking at this early in January. I was saying to my wife, this, and this is when Lyft was not on anybody's radar. And it was like the second cousin to Uber. And nobody was talking about Lyft. But what I saw was just risk reward. I saw this double bottom. And if a market has bottomed, then what? It's just going to go higher. And so it was in this area right here, where on the daily, you had a double bottom right there at $44. I started buying the stock and the call options, and I made hundreds of thousands of dollars in that move. And to me, it was all about this. So once this thing kind of come back, it sold off, just like this thing sold off. To me, these are opportunities. So last week in Lyft, you had this kind of reversal. You made a new low. You did close closer to the high, even though it's a red bar, you closed closer to the high. Now, the only problem, again, aesthetically with this is, as I said, when markets kind of come crashing down this hard, they, can't go straight up against that. They've typically got to find a way to start, building out again. But I just feel like, there's enough room here where you could play this and get, start getting a position in on a risk reward. So like I said, there's two things I use, the key reversal or the inside day bar, as kind of my anchors to kind of tell me, where I can get in. So you can see, like today we had this little itty bitty inside day bar. You can see the range from high to low was within the range of yesterday's high to low. So to me, that just represents a compression. And I'm surmising that the compression is going to break that way. But, the way to play this is put a buy stop above today's high and a sell stop below yesterday's low. So that's your risk and that's your reward. And so I just try and find trades like this to get into. Some are better than others. Like I said, this is not really, I don't know, maybe it'll go up very quickly. It sold off, drastically, but it was right here in this time frame that once I understood that this was part of a double bottom and this was going to go higher, once I saw this double bottom and then I saw this inside bar right there, I then started going to town and I started buying stock right there, and I started buying the call options. I bought the $46 calls and the $47 calls for about $1. And that week they went to 53. I got out of my dollar calls for $7. So I made 700% on the calls, and I was in the stock that I rode up to there, and I just made a mint. And so again, it's just noticing the patterns and then trying to get in sync with the trend that's indicated by the trend and or the pattern.
Following up to that, Mark, Musab is asking what are the main patterns to learn?
Okay, you can go to our website, thepatterntrader.com. We have something called 21 Power Strategies. It's there for free. It should combine a lot of the patterns and the trading strategies. So that's probably a good place to start.
Could you say that website again? Let me put it in the chat.
Thepatterntrader.com. That's my main website. And then somewhere around there, I don't even know where it is. It's 21 Power Strategies. And it's available as a download for free.
All right, and I keep getting this question: do you trade crypto?
I don't. No, I don't. I don't. I don't. I don't know what they are. So I traded them early. I took an early loss. I never got back in. Obviously, I wish I did, but now to get back in here, I don't know what they are. Look, I'll trade any chart. The problem with those is that they have such a funky history, and they're really these parabolic charts, which I would really caution you guys to stay away from in the main. I know it's a FOMO, everybody talks about it, and then it becomes real. But to me, all charts are the same. So when I see a chart that, starts looking like that, goes from 4,000 to 65,000, when you make 1,000% return on something, just intuitively, I'm just old enough now, and I can't trade that anymore. It's just what I call FOMO. It's just you're chasing some momentum, and it just becomes a momentum trade. So, and it doesn't really have a lot of history. Actually, I remember I do this Friday session where I analyze all of the markets at 11 o'clock on Friday morning, and I remember analyzing this chart. And I wish I'd taken my own advice because, I said, this thing's, starting to break out. So this thing just obviously had a very funky history where, sorry, where's, it was, early, a very parabolic move where it went from cents to like 20 grand and then crashed. So it was very difficult. You have to have some history. You have to have a chart to trade. You give me a chart, I can make sense out of it. And, there was a point actually right about here where you had this symmetrical triangle. And I said on that 11 a.m. thing, I said, this thing is starting to break out. You kind of had this common support line that this thing was holding to. And then it started to break out right here. So this is, you can see, a perfectly symmetrical triangle. Sometimes it just amazes me how you have all of this arbitrary trading over years. And then an architect probably couldn't draw this, symmetrical triangle even, more perfect. And you can see right there, and I said at the time, it was like 9-10 grand. I said, this is probably a buy. I never took my own, I trade everything, and I'm kind of, upset I didn't. But now what do you do with this thing? Now it's just, what we call parabolic, where it just goes up parabolic. And usually those things, end the same. So you can see you had a parabola in the first part of this thing, and then it crashed. And this is, I guess, the history of it. So maybe, you wait till the next crash, and maybe I don't know. Thing is, I don't know what Bitcoin represents. That's my problem. It's an arbitrary value. It's not like a stock that has revenues and shareholders and metrics that you can come to some kind of thing. It's a coin. So I don't trade it, a short answer.
All right, and when you put in the order, do you submit order to execute on pre-market / aftermarket or just main session?
I'm sorry, say that again.
Valentina is asking, when you put in an order, do you submit order to execute on the pre-market or aftermarket, or
I'm
just main session?
Well, I'm assuming you're talking about stocks.
Yeah.
Stocks can, I mean, pre and post, it can be very arbitrary. Sometimes you see prices in the pre and post that, then the regular thing starts and it doesn't represent that at all. I mean, Tesla closed in the aftermarket session on Friday night at 598. And, when it opened at, what was today's opening? Today's opening was 575, $23 lower. So, no, typically I would just use the regular market session. In Forex, you obviously have, so whenever I send out my elite emails, these are my daily emails. They go out typically around, between 4:30 and 5 p.m. But this is where the Forex goes through a kind of a reopening, where it does a trade session close and then a reopening. And for an hour, the brokers do an adjustment. And you don't want to trade during that session, even though you get my trades. You don't want to put your trade in because, they'll send like a 5 pip spread in pound New Zealand to a 23 pip spread. And if you put your trade in right there, you're going to get, triggered in at a huge, whack to you. So you want to be careful about that. But, I would just stick to the regular market sessions. You can wait.
I'm also getting a lot of requests asking if you could tell us some more about the elite program.
Yeah, I wasn't sure if I was supposed to do that today. Dwight, do we have a link that
I didn't have it, so
yeah, and
I
I
do have
was
a video to play at the end, so you just let me know when you're wrapping up.
okay. So yeah, then yes. So then that's the best way to understand that. So yeah, so at the end we will play a video on how you can join the elite service, what the elite service is. It's the highest thing of what I do. It encompasses everything. It encompasses daily emails. So for instance, this is what today's email looked like. I think I sent it out just before. Did I send it out? Hang on a second here. I always have to clean up my own personal email out of this, so just give me a moment. And but you can't buy this off our website. Once you sign up, you read the video. If you think you'd like to sign up, then you fill out a questionnaire, and then one of our team members will talk to you in detail. So this again is the and I put the wrong chart. See, I sent it out too quickly and I put the wrong chart. I'm gonna have to send this email out again. So this was pound New Zealand, where I said I'm currently long pound New Zealand. I'm looking to add, and in my haste, I didn't put the chart there. And this was Uber, where I suggested putting a buy stop above today's high based on this reverse triangle. So this is what you get, and this is all of our open trades. I've been short dollar Canadian, for several weeks now. About 700-800 pips. These are all the trades. It doesn't include my gold trade, which I got out today with 400 or 500 pips long in gold. And so I also tell you how to manage, where to put your stop loss, where to put your take profit, the open P&L. So it's the whole purpose of everything I do at the Pattern Trader, but certainly with the elite, is to kind of educate you guys on price action, so that if you receive enough of these emails over enough time, I know it may sound daunting to those of you who are uninitiated, who are hearing this for the first time, but you see me literally making tens, hundreds of thousands of dollars on nothing but these kind of chart patterns all the time. And so my whole the principle of setting up the Pattern Trader was to give you, so I always share with you what I'm looking at. I draw the pattern, then I draw up the trade where I think put the buy stop loss, take profit, and then I will move these parameters. So if this thing starts moving in my favor, I will start getting out of the way. I'm not going to let it stop me from making more money. So I just throw a take profit in there as an initial thing. If tomorrow this thing goes up $10 and takes me out, I'll say thank you very much. But my whole thing is that I feel like this is going to turn around, and if it does, I'm going to just kind of move my take profit more and more out of the way. And if, this thing goes up to 65 and 75 and 85, I'm not going to stand in its way. So this is, the whole thing is an educational. It's not a signal service. This is not a managed account. So everyone, usually just focuses right here. What's the trade? Where do I get in? Where do I put my stop loss? And then, can you just do it for me? And the thing is, if I just did it for you, then you would never know how to do it for yourself. And so the whole thing is designed, really, this is the education, the chart, and then my explanation. So this is really what you should be consuming, because even if this is right or wrong, so it doesn't matter if this wins or loses, it's just another trade. And I didn't even have my take, did this so hastily. Typically I have a trade risk profile. I'll talk about that tomorrow. How much you should risk on an individual trade, how you can actually calculate your risk on your account. And that is perhaps the biggest, the most important thing you can do. Most people are just taking arbitrary risk and, taking too big a risk on each trade. And if they're not, then they think they're, if I just, risk 10 pips or 15 pips, I'm being a good boy. I'm putting my stop loss in. But the thing is, you can die a death of 1,000 paper cuts, where you can just, take so many 10 pip losses that it accumulates to, hundreds of pips. So you can see my take profits are wide. So you can see my entry order was, to buy it at 196.27. And you can see that my stop loss is 200 pips away. And you'll go, well, I could never take a trade with a 200 pip stop loss. I would get just, killed. And if you did your normal position size, you would get killed. But, here I'm saying just take 1% risk, even though you do. And I'm going to show you how to use a position size calculator tomorrow so that you can understand risk. So it doesn't matter your stop loss in pips. People think, well, if I'm just taking a 10 or 15 pip stop loss, then I have a low risk. But the thing is, you can't trade pound New Zealand with a 10 or 15 pip stop loss. This thing's motoring up and down 200-300 pips every other day. You're just, you won't stay in that kind of market. So I like to put my stop loss, away from the noise, let the market work for me. And so what it, requires, you take a smaller position size and let that work for you, over time, and take a much bigger profit over time.
All right. Kaz is asking if you use fib sequence.
I don't. And so it's just, I know this sounds crazy. And I'll show you right here. I'll show you my trades right here. So this is all I was looking at. There's no volume. There's no fib. There's no moving averages. There's no mystery. There are no secrets. There's nothing more than I'm showing you right here. And I'll try and find on my charts that sequence of trades. So here was right there, that sequence, where I, sent out the email, put a buy stop at $45.83. And I said at the time, I'm long Lyft common stock. I'm long the 56 call options. I'm long, and I was also long the 47 call options at the time. And this was a copy of my broker statement. I know it's not elegant. My broker doesn't show where I get in, where I got out, and what the profit is. So, it's like I try and be completely transparent. Believe me, this is not a demo account. This is my personal live account for all of those of you who, you say that, I'm kind of using different accounts. So you can see I started buying 5,000 shares, 1,000 shares, 2,000 shares around $45. I bought 7,500 shares around $46 and sold them for $58 and pocketed about 90 grand on the stock. And then you can see I was buying the $46 call options for 92 cents. And I blew them out for $7 down here. So I made a 760% profit. And I made 90 grand on those call options. I made $73,000 on the 47s, and I made 90,000 on the stock. So I don't know what that is, about 250 in about a week, looking at exactly this setup right here. And, kind of a funny story, or maybe not so funny. You may not have noticed I have a bedroom or a bed sitting in my office here. It's not because my wife kicked me out. I've been recovering from a number of surgeries, and I remember this trading sequence really well because I was right out of a major surgery. And I was saying to myself, I really can't trade. I can't really, encounter the risk and all this stuff. But I was literally waiting weeks and weeks for this situation because of the double bottom I saw and lift. And you can see that for many weeks, it kind of tapped out at 50 and then, took this dive lower. And to me, this dive represented, just the opportunity literally of a lifetime, where sometimes you just see these things and it's just, so once I saw this double bottom. I know it looks weird. And then this inside bar. And that's where you see the combination of where I just loaded up. I started loading up. You can see it was 128. So I had surgery literally the day before, January 27th. And so I was my room recovering and saying, I really can't trade, but I just saw this setup and you can see January 28th, 29th, I started loading up on the stock and the options. To my mind, I think you have the same situation here where, based on that long-term double bottom, tells me that the market is going to go up over time and that this is just, an amazing opportunity. And now, you could buy it pretty, cheaply where, and all you have to do is put your buy stop there, your sell stop loss there. So this is exactly how I evaluate, risk versus reward. And that's what it's really trying to drill down where you can find these little nuggets where you can get in the market when it's ready to go in one direction or another, and then figure out your risk. Sometimes your risk is bigger than others. But, this to me is, and tomorrow, you could even have a minor fake out where you come down, you take out the low and you still do one of these because, again, I feel like you need to build sideways. So you may need to do one more bar in here. You may need to get one more blowout here. But these are days where I don't even put a stop in. I'll be honest with you. I don't like to admit it. I'll just buy something like this, not put a stop loss because tomorrow you could bang out, bang through these lows and then it'll come back again. So I just find that this is an area where the risk and reward now starts becoming a little bit more favorable. All right, Dwight, I'll take another, 2 or 3 questions. I'll do another 5-10 minutes and then we'll leave. We got to leave some on the table for the rest of the week.
All right, we have tons of questions here. Lester's asking for newbies, what is the recommended amount to open an account with and what particular trading platform should you be using?
Okay, so those are not areas that I'm really going to dwell in, and because obviously I can't know everybody's financial circumstance. You shouldn't risk anything more than you can afford to lose. And the thing is, people really kind of start saying, well, you're doing this because you've got a monster account size, and so I got a smaller account size, so I can't do that. And it couldn't be further from the truth. People say, well, you're taking a 200 pip risk in pound New Zealand. I can't do that. Well, of course, if you do your normal position, you can't do that. But if you do a much smaller one, you can. And I will show you exactly how to do that. So I can't say how much somebody should start with in an account. What I would say is that, every journey starts with a single step. So if you've got $500 or $1,000 or whatever it is, get started somewhere. That's where I started in 2000. I was wiped out after a whole bunch of lawsuits and whatever. I had nothing. I had a new kid. I had less than $10,000 to my name. I didn't know what I was going to do, and I just started applying all of my knowledge. And I built a significant amount of money just from trading. So start wherever you can. In terms of broker, find a broker that is reputable. I don't know where everybody is located in the world. Find brokers that will accommodate your, lists, your risk and your trading objectives and, what you want to trade.
All right. In the interest of time, I'm going to go with a question from Henu. He's asking if a trade goes against you, do you ever analyze what factors made it go against your trade?
Well, I think that's kind of the, self-serving, but that's the beauty of the pattern trader. So over time, you'll notice what trades win and what trades they lose. And to me, you learn more from your losing trades than your winning trades. And so I don't become preoccupied about, that. In fact, I would say that, ever since like here a couple of months ago when I was getting out of hospital, and maybe because I've had such personal consequential life changes, my life has literally changed. Everything that I enjoy has been taken away from me because of all of these injuries. And so I have kind of a whole different perspective, and it's actually made me a lot better trader, because I don't really think in terms of money. I don't dwell on my losses. I don't even know how much I've lost. And then I've had these enormous wins, enormous wins. I mean, I think I just showed you a win the other day. It's like 300 grand in QuantumScape, and I've been doing this like a lot. These are real trades. So that was like 300 grand. I don't even see that. My heart doesn't skip a beat. I know it doesn't sound genuine or authentic to say that, and maybe it sounds a little jaded, but I've kind of gotten to a point in my life where, you realize that, your health is everything, and that money is, but, for me in trading, what I really focus on in trading is the setup. So once I got out of this trade, it's like, okay, I made money there. What's the next trade? Where do I go now? So it's always about trade, setup, win, loss, just get on with it and then move on. And I'm always like a piranha in the water, like a shark in the water. I'm always looking for the next QuantumScape where I can get in at 42 and get out at 25 and make a boatload of dough. When I can find that thing at lift at 44 and get out at 65, I'm always focusing on the next horizon. So whatever happened, you can see I dumped like 65 grand today in Tesla and all these freaking options. And, I'm not going to dwell on it. It's like, so this is what I did today. We'll see what happens tomorrow. And I don't see it. If I have to get out of Tesla, I'm just going to get out and then I'll move to the next trade. I'll dump 50 grand and, and move on. And it's a lot of money. I mean, it's, if I have to stop and think about it, what it could do for my kid, and, it would drive you crazy. And that's the thing about trading. Once you kind of get deeper and deeper into trading and you do better and better, now you're starting to deal with sums that, are daunting. You start equating to you, well, if this is like a month's worth of rent or my mortgage, or, I could buy a house, and it becomes overwhelming. And so I kind of, look beyond the money, and I look at, I'm really a purist at heart. So to me, it's all about the setup. And to me, like this setup, it doesn't look it, but this looks like QuantumScape before it took off the other way. So this is like an upside down version of QuantumScape, the pound versus New Zealand dollar. So now I'll dump Tesla and I'll just focus more on pound New Zealand dollar. I always try and find the one setup where I can start feeling the integrity of it, where I can start, understanding the risk reward. And sometimes it gets to the point where, and this is where I get worried about myself, where I play very big, is that I start seeing that there is no reward. So the more mature a pattern gets, and so what I mean by mature is that you can see that this is shake the leaves, this is shake the trees, this is, bare knuckles, for those who've been in here, or white knuckles, whole tranches of time where it just careens down and then it goes sideways. And so to me, this thing bottomed all the way here. And this thing has just been maturing. And the more time it puts on, then the risk gets less and less. So each time then it does this flush out, these flush outs are going to be smaller. And so you can start, putting on positions now in the expectation that it's going to go much higher. It was like the other way around in QuantumScape, where it was coming down and down. And then, you're in this period where it was about to go here, and it had all the flush outs. It was mature. It had done all of its head fakes. And I think pound New Zealand is one of those things. So this is what I tend to do. I try and move from trade to trade, and then I'll just stick with something like this. I'll just sit in this thing as long as it'll have me. And so it's really, to me, about the trade and not about the money. And I know that sounds crazy, you have to understand risk, and you have to kind of position yourself to, not take crazy risk. But if you can get closer and closer to trades that have smaller and smaller risk for bigger and bigger upside, then you can have these outcomes. And that's what I'm looking for. I'm always looking for the next pound New Zealand, the next QuantumScape, where the risk is being reduced and reduced and reduced until it's ready to just go. And that's, I'm always, looking for that. And then the losses, I'll just bury them. And to me, I want to get out of the losses as soon as I can to get, into the good trades. And I think this is also what the opposite of people do. People just hang on to the losses, hoping that they're going to come back or whatever. I just see, hey, this is not QuantumScape. This is not Pound New Zealand. This is not working. It's taking my time. I want to, take that time and those resources and move it to something that's going to work in my favor.
All right. So how far are you going back on the chart to find that one setup?
Sometimes, in this instance, this is kind of enough for me, forward. But, I have, like I said, I started by looking at this on the weekly chart going back 5 years. And because I understand that pattern 5 years ago and what that pattern, the consequence or the trajectory indicated by that governing pattern, then, I know what the cadence of this thing is. So I can't really say I'm just looking at it from here. I understand the thing going back 5 years. But, sometimes I can see it in, even in this, time frame where you kind of had this rectangle pattern. You had all of the leaves being shaken. Now you've broken out to the upside. You have these, inside bars. So this is all, once I understand what is the guiding or governing price pattern. So this to me is the pattern. This is all just the magician kind of just distracting you over here when he's going to pull the rabbit out of the hat over there. So this is just all distraction. And, I've been saying this for weeks and months, and I know that people who are new come to my service and, they maybe buy it here and then it's all the way down here and then they get out, then they buy it here and then they get out there. And then after, many losing trades, they say, this guy's garbage. He's just a scammer. Meantime, I just buy it here and I just will hold it for the next, months. Because to me, I'm relying on this and now this and now this. So it's getting closer and closer to something that to me is, that's really, it's, I have like a 4-step pattern, a 4-step methodology that gets you closer and closer to the bullseye of a high probability setup. So it first starts off with a chart and or direction. So the chart pattern is a bullish double bottom. The direction is higher. We have this interim thing. Then I look for, a set of days or day. So you have the key. So you have these inside day bars. So you have the direction is a higher. You have the pattern. It's a bull. You have the inside day bar coil. And then you layer it with an execution strategy that just requires you to put your buy stop above or outside this range. So you can see that this is the daily range. I have my buy stop today just sitting a little bit outside the high of today. So what I do is I require the market to confirm what I'm looking at. So if we just open today and we start going lower, no harm, no foul. My buy stop won't be triggered and I'll simply, cancel it and, look for another trade. And then if my buy stop's triggered, I've got a stop loss behind it. And then I'm just going to start managing the trade as it, goes in my favor. So it's like a 4-step process. What is the phase or the condition of the market? Is there a chart pattern? Is there a, reversal bar? And we'll give you, I actually have a book that I wrote on this. I'll give you a handy way to get hold of that book. And then I layer it with a trade execution plan that requires the market to confirm what I'm looking at. Mine is just a subjective analysis, but I always require the market to run into, the thing to confirm what I'm looking at. And then that also puts you in. So if I put my buy stop here, now I can go and have dinner. I can go I can do whatever I want, for the next, 4 hours or whatever. This thing's just fooling around here. I don't have to be, peeled to the screen, watching 3 hours, waiting for some magic crossover. maybe getting in here and then all of a sudden it's an 80 pip, move against me. And I'm wondering, now I get stopped out and wondering what to do. I just have my buy stop triggered here. And maybe, at 2 in the morning, it triggers me. And then I wake up and I'm into an effortless trade. So to me, trading should be effortless. The market should do all of the work for you. I just look at the setup and then let the market put me into these trades. And then once I'm in them, just, stay in them. All right,
Awesome.
I'll take one more, Dwight, and then we'll tie it up for the night.
All right, let's wrap it up with D, who's asking if there are large holding fees with holding a trade for a long time.
That is a good, let me see if I can find you an example of that real quick. D. There are something called swap fees, which are fees that your broker charges you for holding it. But I would argue that paying the swap fees are a whole lot less than trading in and out, having your broker take 2 or 3 pips. So here's a trade example of a trade that I sat in for 3 months a couple of years ago. I remember this trade pretty well. It's in the dollar yen. And you can see these are the swap fees that you're talking about. In this particular trade, I paid $46,000 in swap fees. Now I had a big trading size. I had 51 lots here and I paid $46,000, but you can see I netted $300,000, including those swap fees. Now I stayed in this trade from April 25th to August 12th, 3.5 months. And so basically I did one trade, 51 lots, and made 300 grand. And I paid these swap fees. Now this is opposed to, let's say I trade in and out, 5 times a day and then 25 times a month. So that means I would have traded 125 times a month, times 50, remember I had 51 lots, times 125, times 2 pips, times 3 months. And all of a sudden you're spending hundreds of thousands of dollars. And you would never have made 650 pips in this trade as I did over 3.5 months, trading in and out 5 times a day. You'd end up, losing. So yes, there are fees to hold, and that's the calculation, the relative risk and reward of holding these positions and paying these additional fees. But I would argue that taking 300, 500, 600 pips out of the market on one trade and paying the swap fees is a whole lot better than paying, being in and out 5 times a day, 25, and then paying, let's say $20 on a trade. So you're paying $2,500 a month in just the spread fees, on one contract, one normal contract. So you are paying a fee, whether you realize or not, by getting in and out all the time. Your broker is charging you a 2 or 3 pip spread. And by getting in and all and out, you've got to overcome that spread. And that's why people are losing. You just can't. You can't be efficient trading in and out 20 times a day. You can see the pound New Zealand dollars, I better get my buy stop in there before it triggers. I didn't put it in before this webinar. Let me just, I think it was 196.27. Sorry, I'm a little distracted here. Yeah. So, the thing is, the problem is right now, the spread is a little wide. The spread is about 11 pips on a pound New Zealand contract, where it should be a little, so it's a bit of an offset about putting in your buy stop now. So you're better off waiting till after the spreads start contracting. All right, Dwight, I think I'm going to end it there. I want to thank you guys for, committing your time. I hope you got some value, some input out of this thing. We're just starting. I know a lot of you can be overwhelmed. We'll, talk about this and reinforce, this over time. But, this is really what it comes down to me. I just see the markets from a visual standpoint. And I think, this is a very important characteristic. This is all I'm looking at. I have no idea about the relative trade merits between between the UK and New Zealand, what the relative interest rates are, what the exports are, what the relative, interest rate disparities are, to come up with, some kind of fundamental analysis that I could judge whether this was a good investment or not. I am simply looking at a set of prices and price action to determine, how to play this, and then coming up with a risk reward that, I can then justify. And, I just do this over and over again. And you don't have to, you don't have to have too many of these. If you're making 5, 6, 700 pips on a trade, you do that 3, 4, 5 times a year, you're in the pink. It's much better than, trying to battle it out with your broker 5 times a day for, 5, 10 pips, just picking up the scraps. All right, I'm getting some great feedback from you guys, so really appreciate it. And your feedback is, very important to me. I'll, kind of ask you to, for more formal feedback later. So, I kind of learn. I never know how much, a lot of this stuff just lives in my brain. I never know how well I explain it, how much you get it. Everybody's at a different pace. Everybody's at a different level of their trading. So, I never know, if I'm going too fast, too slow. And thanks, Mark. Appreciate it. So,
All right,
Joseph,
Mark.
what
So
amount do we need to trade this method? There's no, you don't have to have a starting, a required trading size. You can start as small or as big as is warranted for your risk and your financial condition. All right.
awesome.
Thank you very much. We'll see you tomorrow, 4:30. I need
Hold
to
on, Mark. We're gonna wrap up with the video before we
Okay.
send them off.
Okay.
Hi guys, this is Mark Shawson, the Pattern Trader. And what you're seeing here is a still image from a video I recently released on YouTube. In this video, I showed live statements of how I made $177,858.13 in just 48 hours. After releasing this video, I read the comments beneath it, and they shocked me, but probably not for the reason you think. For example, a Trader's Life said, "Wow, I can't even imagine having that degree of success." It turns out that not many traders make $170,000 in profits from their trades. In fact, to my surprise, the majority of traders aren't even making $5,000 on any given trade. So I've decided to run an experiment with a select group of traders. I wrote an email to my list and asked them one question. I didn't think many would be interested in this, but to my absolute shock and surprise, 1,126 people wanted in on this experiment. I got over 1,000 responses to this question, and some of them wrote really long answers. The comments you see on the screen right now is just a small handful of them. You're probably wondering what got those traders so excited. Let me continue reading the email I sent them. Why on earth are so few traders not even making the bare minimum of $5,000 per profitable trade? And last night, the answer hit me like a ton of bricks. People are following me online, watching videos, taking trades, but there is still something missing. So I came up with a plan, an experiment. To make the bare minimum of $5,000 per profitable trade, you need about $200,000 in your trading account. So I've decided that I want to take on between 10 and 20 traders and give them a customized plan to reach a $200,000 trading account. And then I would execute that plan alongside with them. However, this idea is still in its infancy. I need to know whether or not people are even interested in something like this. My gut feeling is that most traders are just in it for the rush, the gambling, the action, the 5-minute charts. They're not in it for the long haul, a multi-year plan that'll actually get them to a minimum of a $200,000 trading account. So if you are a trader who would like to know exactly what it takes to grow your trading account to $200,000 at a bare minimum, and you want to find out what happened next in this experiment, then pay close attention to this short video. In fact, by watching this video all the way to the end, you'll end up discovering how to get your own very customized plan to achieve a $200,000 trading account. A plan that doesn't require you to jump from one guru to the next using weak trading systems. A plan that uses a scientifically tested trading method to reach 200,000 and one that makes it mathematically impossible to lose your entire trading account. The shocking truth is that you've been lied to when it comes to making big money in the markets. And those lies have all but destroyed your chances to reach the success you desire. You may have heard, or perhaps even believed at one point, that you can make a huge amount of money in the Forex and stock markets. And to do that, you were told you simply need to find out the secrets of some trading guru or system. And these secret methods are hidden, just out of reach. And when you finally find the right person that will reveal their secret trading method, you'll be financially free. Unfortunately, that's nowhere near the truth. Just know this, countless other smart men and women have fallen victim to this rather clever lie. Penny stock secrets, Bitcoin secrets, a trading robot running some secret Forex algorithm, Wall Street secrets. These secrets are the reason you've been struggling. The truth and the fact of the matter is that making big piles of cash in the markets is no secret. Here is how the world of trading secrets really works. A fund manager or a group of traders on Wall Street use a strategy that makes money. They want to raise money from investors, but those investors don't trust the group of traders. So they bring in a data scientist with a PhD in the subject to verify the particular strategy. And this is what happens next. One, they need to strictly define the parameters of the trading system. Two, they then test the strategy using a data set. Three, they write a paper about it and explain the limitations. Four, this paper is ultimately peer reviewed by other data scientists to see if the results are statistically valid and true. Number five, even more data scientists read about the strategy in a journal and try and replicate their results in all sorts of different markets. So there are no real secrets. Everything is out in the open. For example, Gutierrez and Kelly are two data scientists who confirmed you need to trade on the daily, weekly, and monthly time frames. Predicting the general direction of the market with scientifically tested trading patterns is well established by countless other data scientists, including Friesen et al., Lowe et al., and Foltis and Langer, where you enter, exit, and everything else about a trade is already out in the open. So why on earth do you think I spend so much time revealing my secrets for free on YouTube and Zoom? Because they aren't secrets and I have nothing to hide. It's the same as every other job in the world if you think about it. Take a plumber, for example. The information you need to become a person who fixes pipes is well established. It's not some secret hidden by a few select plumbers who are ready to spill the beans. However, if you give me a book or an online course and send me in to fix somebody else's pipes, I assure you I will fall flat on my face, no matter how many plumbing secrets you give me, and that's the big truth. To become an incredible trader who makes piles of cash, you need to follow a proven formula, and then you need to stick to it. And if you do, you may be able to look at your broker account and see things like this.
Right now, making about 158 grand on the FX side. This is $1.5 million dollar position. I'm making over $157,000 currently. You can see that I've got two positions. I'm making over about $500,000 in gold and long pound New Zealand, short the NASDAQ.
It is possible, but it is not sexy. It takes time, it takes commitment, and it takes consistency. Just like it takes time, commitment, and consistency to become a decent plumber, electrician, or accountant. Deep down, I think you already knew this truth. Deep down, you always knew that it was possible to make a living from trading, and you always knew that it would take a serious commitment to get it right. That's what happened when I sent this email. My gut feeling is most traders are just in it for the gambling, the action, and the 5-minute charts. Not for the long haul, a multi-year plan that'll actually get them to a minimum account size of $200,000. I realized that I was wrong, and it turns out 1,126 traders are exactly like you. Tired of gambling, tired of jumping from system to system, tired of not knowing what's around the corner, tired of falling for somebody else's secrets. So my experiment involved two things. One, I would personally oversee a customized multi-year plan for each trader that shows them how to get to a $200,000 trading account. A plan that takes into consideration their income, account balance, and other circumstances. They would get an exact timeline of when they would hit $200,000. And they would know precisely what to do and when to do it, planned out with dates, amounts, and specific actions they need to take. 2, I would personally spend 3 days with them in an exclusive trading group. This was not a webinar. This was a live Zoom meeting. They got to speak to me and trade with me face to face. It was an intimate group trading marathon where we went into the markets together and looked at trades. They got to meet other traders who are in the exact same boat as them. No more sitting in the comments section waiting for me to answer questions or critique trades. They weren't one among 500 traders like usual. I chose 50 traders to personally coach. It was like we were all in the same room, able to talk and interact like human beings. And the feedback from this experiment was a lot better than I expected. Now, if you'd like to get your hands on a customized plan to get to $200,000 and a 3-day coaching marathon with me, just like the traders inside my initial experiment, then listen carefully. 1, send an email to Mark Shawson, RSVP, at gmail.com with the subject line 200K. 2, one of our team members will send you the rest of the details on how to sign up. However, before you jump off the video and decide to join us, I have to warn you, there are a subset of people who should not join. 1, someone who wants a quick fix. This is a multi-year plan. I don't do quick fixes. 2, someone who doesn't want to invest time and money into the program. I only want people who are going to take this very seriously. If you have a problem in investing and taking risk, then that's fine, but this isn't for you. 3, someone who thinks in terms of months, not years. Again, trading takes time. If you tend to give up after 6 months, then I'm not the guy for you. It takes a lot of manpower and resources to deliver this program to you. The $200,000 plan will be customized to the specific circumstances of each person who joins, factoring in your current account size, income, etc. You will also get 3 intimate group coaching sessions with me where we go deep into the markets and enter trades together. This is a small, interactive meeting with me and a handful of other students. It's not like my other huge webinars. Therefore, there is a fee to join. This is not a free program. However, if you get everything mentioned in this program and you don't think it was worth it, I'll happily refund you the fee. So hop on board and get your customized plan to a $200,000 trading account. Pick my brains, take my trades while spending 3 days with me and a group of other traders. And after that, if you didn't like it, you'll get a cheery refund. That's as fair as I can make it. If that sounds good to you, then send an email to Mark Shawson, RSVP, at gmail.com with the subject line 200K. And please don't forget, I can only take on a small handful of traders every time I do one of these programs. If you miss out, you'll have to wait. Hopefully, I'll see you on the other side.
All right, everyone. So that's the webinar. We'll see you guys tomorrow.